Welcome to the Crypto Compliance Podcast by Gatenox.
Pawel Kuskowski welcoming Crypto Compliance by Gatenox, where compliance experts and practitioners are talking about current markets, events, and general compliance aspects. Today I'm here with Garcia, Director and Head of Public Affairs, Policy, Regulatory Affairs at Xapo Bank, lawyer at Isola Law Firm, advisor to United Nations Office on Drug and Crimes on Cryptocurrencies, advisor to many governments and regulatory bodies. Hi, Joey.
Hey, Paul. Good to see you here.
Good to see you. So, Joey, which part of the world right now you're in?
I'm in Gibraltar, so down on the rock, as it were. But here down for a while. But as you know, moving around a lot, as always, Paul.
Yeah. And you've been recently to many countries in Asia, right, as part of your assignment with UN. Tell me what's your perspective on the world? Where is it happening in terms of crypto?
That's a really good question. In terms of what's happening in the ASEAN, so Southeast Asia region, and all of that, it's also super interesting. It's a hub of innovation, and arguably, how can I put this? I'd say that there were lots of legacy large countries around the world that have sort of taken a starting point of, we have hundreds of years of law and regulation and we're extremely well established, so let's just try and square everything new that exists within legacy frameworks. Then you have like ultra new jurisdictions that are creating legislation from the ground up, a very, very open book. That's the other extreme. And then I'd say Southeast Asia sort of halfway in between. They have lots of legacy related good, solid financial services infrastructure, but they're much faster. They're much more open to sort of new concepts and development. So much faster moving, I'd say. We're still talking. You can speak to any of your US colleagues or everything else. They're still talking about what is a security, or what is the Howey test, or how will it apply, and all these sort of legacy issues that whilst I think in that part of the world that they're looking at lots of different things. So it's very interesting.
So listen, you've been for how many years? You've been one of the pioneering lawyer, right, in this space. We met 2017, 16 in Gibraltar when we've been doing the ICO for CoinFirm, and we met first time and we had really interesting conversation on this topic. So there was 2017, 2016. And it looks like when we look back, what's happening right now, what's your take on what's happening right now? Where is let's say the origin of the current regulatory movement? And question is whether this is fast or slow in terms of development, and whether this is actually going in the right direction in your opinion, or it's quite opposite in the wrong direction.
What happens in this industry or this world is, it's incredibly fast moving. So the development of infrastructure, the application and use of distributed ledger technology or blockchain infrastructure, it's incredible how fast it's evolving. If it evolves much faster than legislative infrastructure or policy developments or regulatory frameworks. So matching sort of technical development with legislative development is very, very difficult. And that's where sometimes smaller jurisdictions that are a little faster and how they can adapt and react to things like that have pretty concrete advantages. I started that process back in 2014, 2015. At the time, everyone thought I was absolutely crazy. We always talk about the first sort of working group meetings. Some authorities might send an enforcement agent rather than a sort of policy team to that meeting, or even a police officer. And it was really sort of crazy. And then that comes all the way through to the FATF in June 2019. And there you have recommendations that are published around the registration or licensing of virtual asset service providers. And that was a trigger. But again, the FATF are not they're a global standard setting body for AML and CFT regulation, but they're not a regulatory authority. So the recommendations, are focused on that, and that's where there is a deep amount of experience. But how countries have reacted to that has been like quite spectacularly different, and that it's created other issues. So if you have an international organization or standard setting initiative that says we should all register or license VASPs, there are loads of issues that spin out of that. One is the definition of a VASP. So what should be brought within the scope of that definition and what is outside. It's changed. Every country has slightly different interpretations of that.
And why do you think, why do we have this change? Differences? Because it seems like, it's simple definition, right? Like you operate, you transferring funds in crypto. So more or less that's your VASP definition.
Yeah, but you have, go pre-FATF and you have whatever, AMLD5. Even under AMLD5, a C2C or crypto as a crypto platform wouldn't have been caught within the definition. So then you have the FATF sort of taking one step beyond that and making it clear that is and should be caught within the framework. But then post 2019, what have we seen in terms of smart contract developments? We've seen, just so much stuff. Let's say the NFT universe. Let's call it the DeFi related, DEX universe, crypto-denominated derivative infrastructure, staking, crypto-denominated lending activity. There are, many developments, and it's sort of now trying to and every country reinterprets whether something is caught or not. It's a question of interpretation. So, some countries in some parts of the world have in their law wording that says that facilitation of a transaction. So what does that mean today? True. That means that certain DeFi related operators, our programmers, our developers caught within that definition, they can take one view on DeFi. Others have taken completely different views, and they're all sort of slightly, they're interpreting it slightly differently. And then the key difference is that some countries have sought to just literally comply with the recommendations. Many haven't yet, but to comply with the recommendations, you are really bringing the activity within the scope of an AML or CFT registration regime. It can be as simple, but the problem is that when that happens, you're allowing a business to register itself as a VASP, and the risk within that VASP activity is far, far, far greater than AML. You have really core, customer asset protection principles. You have segregation of those assets and how they're accounted for. You have basic governance standards, basic security requirements. You have, should there be regulatory capital calculation? Should there be insurance? Should there be wind down provisions or business continuity plans? Should there be specific risk frameworks around those operators? And obviously we can go on and on and on about what it means to what it could include. Then you have platforms like FTX, that's the famous one, but really core basic principles. The global head of risk for a gigantic global cross-border exchange platform had whatever it was, 3 months experience in risk management. Is that right? Should that be allowed to happen? There was effectively no governance. So is that right? Should that be allowed? Or should there be a higher standard that's developed to create a secure, regulated ecosystem? But the problem is that different countries are taking very different views on that, and that creates other problems. The bad actors in the space, the good actors in the space pursue the highest possible standard that can apply to them, and the bad actors in the space pursue the gaps, so they know exactly where the jurisdictions are. And of course, it's a global cross-border industry. It does not really matter to the same extent that it used to matter where you're domiciled or servicing customers from, and that makes it much more risky. So if there's a gap in law, there's a gap in regulation, not quite things. The authorities aren't really monitoring anything. Well, then I'm going to domicile myself in that jurisdiction, and I'm still going to service everyone.
Listen, I have this idea some time ago that it's almost impossible. It's going to be impossible to regulate crypto. It's almost like, I mean, I know that this is like big statement, right? But if you think of this, what you just said, it's enough to have one country with low bar on crypto, and because of the teams are typically remote, it's impossible to control the entry points from other countries, because you can have non-custodial wallet, you can have this on your, I don't know, laptop, and you can open account in this particular jurisdiction.
Yeah, but but this is why I always use the expression "know your VASP." People don't conduct due diligence on VASP operations. They might look at like a core like investor group. Oh, these guys are backed by X, Y, and Z. That must be secure. Unlike the existing financial services world, if you open a bank account, of course there are intricate differences between banking law in Singapore and New York and London and Sydney. There are lots of intricacies, but the core principles are the same. There are lots of intricate differences. But with a VASP, it's completely different. So you can have one country where there's literally nothing. It's a simple registration requirement with a requirement for a registered office and a local director, and that is a regulated VASP. Whilst in other countries, you can have very comprehensive, frameworks that bring the activity within the scope of proper prudential supervision. But for the user on the street, they don't know that. They just look at the website. Oh, that looks fantastic. That must be good. Or my friend said this. Or look, they've got 18 really awesome influencers on Twitter, so that must be safe.
And I think the only way to solve this is effectively by other VASPs in like high standard jurisdictions to be blocking transactions for this VASP. But on the other hand, how you can do this? Because it's legally set up VASPs. So it's very, very interesting, subject.
It's very, very interesting, it's one of these sort of. The best global outcome would be a global standard of regulation that applied across every. But that hasn't happened in the history of humankind. So I do think that that's unlikely. But to answer your point before, like the crypto can't be regulated. It's really interesting, right? So no one is talking about, actually no one at all is talking about regulating the Bitcoin protocol. But of course, the access points to that protocol are the regulated intermediaries. So the Zappos and the Coinbases, etc. You are the entry point to that technology or ecosystem, and that's where the regulation needs to apply. And I think that's going to continue to evolve and develop. So the DeFi ecosystem is an interesting one, and I'll give you a good analogy. The analogy would be the App Store, the Apple App Store. So in the olden days, you had these Nokia 3310 whatever mobile phones, and you could play the Snake game and you could make calls, and that was great. And then you had this iPhone creation by Mr. Jobs, and then suddenly interlinked to that, you had this facility to develop applications, games, facilities, training, health, whatever it might be, and all of this entire gigantic universe of applications and developments were created. But the entry point to that app, those applications, are through an app store. So I sometimes think of the crypto industry in a similar kind of way. All of these fantastic things are developing, but will it always be through a regulated access point that you gain access to those services? So will ultimately, the best DeFi project out there is the Bitcoin protocol, and access to that protocol by most of the world is through regulated intermediaries. So will all of these other stuff, all this other wonderful, exciting stuff that's developing, will that become the way that this happens? The CeFi to DeFi or TradFi to DeFi, will that be the regulated access point to those markets? It could be from the authorities' point of view. It could be, there are, the control elements and the consumer protection elements start to be factored into that. You can't just give access to anything. There has to be a degree of security around that. Or some people will argue against that and say to me, no, Jay, that defeats the whole point. And, democratization of finance and financial services needs to be through direct access points. But the problem with all this stuff, Pawel, is it's just the level of abuse that starts to develop. You said the word ICO before. There were some brilliant ICOs, like brilliant projects, brilliant people, brilliant concepts, brilliant ideas, really, really awesome. But unfortunately, the bad actors also got involved with all of that activity. And today, you say the word ICO and it's still, oh, okay, that was that really bad, dodgy stuff. And the ecosystem feels a bit like that now as well, because you have lots of really fantastic concepts around decentralized finance. And then you have lots of people that seem to think that by adding the word decentralized, they're outside of any regulatory perimeter in the world. And there's lots of abuse. And they're very, very, very obvious abuses to that and the way that it's being used and everything else. So what's going to happen? Are we going to end up in a blow-up scenario where it's simply, whatever, regulation by enforcement, or are we going to have the right sort of intermediary approaches to, well, we want to give this access, we want the access point to exist, but will it be through what? A permissioned layer where the financial crime elements are dealt with? Will it be through specific audit layers and requirements? I don't know. But that's the way that I think the industry should be leaning, not regulating the asset.
Let's look what's happening at the moment in the US, right? So you have, I think the perspective is that crypto NFTs are under a lot of pressure, right? Under regulatory pressure, market pressure, but at the same time you have Shopify launching NFT market, GQ magazine, Louis Vuitton. So you have, this is the NFT. Then you have, infrastructure, so Coinbase launching, Base as level 2. So there's a lot of interesting things happening. At the same time, you have regulations, especially US. I think US at the moment is kind of bizarre place. There's a lot of, let's say, a lot of things has stopped because of the US market and US regulations. Like, for example, Kraken, right, discontinue its asset staking product, the custodial one, which was one of the basis for a lot of interesting growth in the market. The staking and let's say Bitcoin based loans, all this stuff. This is very interesting. The Silvergate, that's another one which is definitely impacted. So whole aspect, banking and crypto, and that's something which I think it's extremely difficult at the moment, because if we don't have banks allowing to trade with crypto, then it's the whole sector is pushed to some third-party provider. The payment processors, all this stuff, which will become very, very risky. Like effectively, I think that it's equal risk for crypto to have wrong place on the payment side. Transfer side, as opposed to simply speaking on the crypto side. So what's your take on the US? I know that you are also involved in work on this part of the world. I don't know which part you are not covering. I don't know, Japan, do you cover Japan or not? Not yet.
It's very difficult. The direction of travel in the US and putting those sort of pressure points on, let's just call it the access or entry and exit points to the US dollar through those banks, it can move. It's not the same in the rest of the world. So, I was with earlier today actually the CEO of Bicab, the largest trading platform in Thailand. They're extremely supported by local commercial banks. There are no issues with tie-back payment rails into exchange platforms because it's properly regulated, because it's properly controlled, and that to an extent is happening in lots of different parts of the world. To to create a cutoff or try to create a cutoff, I don't think is particularly constructive. Of course, the Fed and everyone else can issue policy papers and direction, and institutions should look to comply with those. But introducing outright bans or restrictions, typically has not been particularly constructive. It will not really affect the trade volumes or anything else. It's simply going to move it outside of those payment rails and into other currencies or networks, or moving them, off and outside of the. I mean, whenever there's, to use another extreme example, the banning China on crypto-related transactions, it doesn't stop the volume. I mean, it moves the volume onto unregulated networks. It doesn't stop those transactions happening. It just makes them happen through other networks. So, and here, that sort of broad approach to a kind of cutoff. I mean, of course, it can have negative impacts, but the direction will be, it has to be a move away from the US and USD. I mean, I don't really see any other way that can evolve. But the US is I'm not a US qualified lawyer, so I'm not really going to comment too much on all of that stuff. But there is a lot of and I know I was involved with the Libra DM initiative, etc. And that's another interesting example of a really interesting project that wanted to comply. I'm going to keep it that simple. At the same time that it wanted to comply, the other stablecoin numbers, I'll use Tether as one example, were skyrocketing, 450, 800% increases in the volume. At the same time, you had a very professional group of companies looking to have interactions, listen, comply, and wasn't able to get over the line. So to what extent, it's another good example of large countries or very significant powerhouses not either wanting to move at the pace of the evolution of the technology or not needing to. But it does create difficult situations. But where is it all going to end up? I'm not really sure. What I can say is that in this ecosystem, it's not really unique. I think it's happened throughout the course of history. Early adopters of the internet are bad actors. Early adopters of automobiles were bad actors. Early adopters of pretty much everything. No, I mean, you can use whatever. There are just too many examples. And there's always opposition. So when the internet came around and lots of banks started talking about internet banking, lots of banks thought that was ludicrous to give someone access to a bank account through a computer. And then they had to evolve. And when Skype started doing sort of cross-border telecoms communications without telecoms licenses, everyone thought that's crazy. Then it started to happen. Then the Pirate Bay and Napster and all these guys started massive music file sharing systems, and that was all really crazy. And then you had the Spotifys and you had the Apple Musics, and again, sort of the technology starts, then the rules and regulation evolves, and then you have solid, secure infrastructure. And the blockchain world is hopefully a bit like that. It starts, people might still talk about, bad events and whatever it was in, 2015 and everything else. Yeah, sure, that was there. But I think, they need to understand everything else that sits in that context as well. You mentioned Coil Firm, blockchain analytics, and how that can give the accessibility and data that exists within those networks does not exist in it. So It's almost like, compliance innovation is part of regulatory innovation, which is part of tech innovation, and it needs to be supported by regulatory innovation and legislative innovation and all of that stuff. So I just hope that things continue to move in the right way and not with sort of ban, because we've learned from history that just doesn't work.
How do you see what is their perception at the moment of crypto? I mean, do they see this as opportunity, or do they see this as threat? I mean, obviously, we can imagine so many different approaches. I remember, work in Africa, in Nigeria, when one of the risks they had is, the currency being weakened because of the international transfer, which they cannot control because there's crypto, right? So this is one of the example where, it's not necessarily good for economy, looking through the lenses of not developed countries, especially not developed countries. So what's your view on this?
I do think that I think we're way past like the steps of like this is all a crazy sort of whatever Ponzi scheme style arrangement that has changed quite significantly, and I think it's come to a point of people or governments and authorities understanding that it's kind of here to stay. Every so often you have these big blow ups, and they can set that sort of time frame back by 1 or 2 years, but it doesn't halt the time frame. So again, whatever, FTX is always an easy example because that was an access point to the technology. So lots of people say, you see, I told you all cryptocurrencies are rubbish and it's all nonsense. Well, no, the cryptocurrencies, nothing has changed within the infrastructure or nature of those assets. What's changed is the intermediary that's allowing you access to that is a mess. So that's the piece. It's an instigator for regulation, and it's an instigator for the right level of regulation. I think it's scared a lot of countries that were looking at this in a very simple way to react to it very differently. It's arguably over scared some of them, and that can create other issues as well, I'm afraid.
I remember your story when you said that you were speaking at UN, right? And the FTX came up, right? And you said like, yeah.
I mean, it was unbelievable. I was talking for 2 days before the day that FTX happened in November around, what I would expect to see in a VASP framework. And I cited all of the things and then FTX happened on the Wednesday or whatever it was. And they all said, you knew that this was happening. You knew. And I said, I absolutely, and nobody knew that this was happening. But it's pretty obvious that if you have a massive global multi-billion-dollar, platform with no standards, no governance, no segregation requirements, et cetera, that bad things can happen. I mean, it's pretty obvious. I'm not a magician. That is. And then countries have reacted in very different ways to that. But I think that the key message when I speak to some of these authorities, sometimes, I think that, regulation or looking at this industry has to happen in the right way. And it has to happen almost in a public-private sector partnership. And authorities need to be open to those discussions. They need to spend time with the smartest people in the industry in a non-adversarial environment. So you sit with a group of really technical guys and engineers and developers and everything else, and an authority can explain challenges or identify issues or talk about financial crime and say, look, these are the risks. Now you fix them. So have those interactions and discussions. What's historically happened is like authorities can develop standards or frameworks without really any of that, and after the event it creates a mess, or again, I use that expression, regulation by enforcement. They don't even have a discussion and they don't even regulate, they just watch, and then they decide to take an action on something, and then everyone reacts to that and starts to adjust things, and that is a very adversarial way to instigate like the creation of a secure ecosystem or environment. But there have to be interactions with government affairs, compliance, engineers, product leaders, strategy teams, and explore like creative ways of doing things together. And that happens a little bit it happens a little bit, but it does not happen anywhere near enough. That kind of brainstorming style discussion and integration is I think it has to happen. It has to happen. It has to happen more. Like, we you know extremely well, better than I do, whatever, illicit finance. And we can do liquidity pool risk analysis, and we can see all of the issues, and we can look at all these high risk wallets interacting with decentralized networks. And so, that's the problem. So how do you fix the problem? And then there has to be, they need to learn as well. Authorities need to learn around how the technology can be used to deal with those risks in the right way. Not by saying everything, and that's a very good example on the DeFi related stuff. Approach one could be, okay, everything that touches a blockchain is a VASP, and everything needs to be regulated in exactly the same way. Or they can say, well, look, there is a risk that exists, and let's not try and find an intermediary. Let's look at whatever it is, on-chain compliance-based systems, or specific. We've talked before around compliance Oracle-based systems, or whatever it might be. And then you define a transaction, you look at how they work, you identify the risks, and you structure and create solutions. That's a really positive way to think about this, but doesn't happen enough either.
Listen, I'm just in the meantime, I'm looking at the main exchanges, Bitcoin market, Binance, BTCX, Coinbase, Gate.io, Bitfinex. Binance registered in Bitfinex BVI, Gate.io Cayman Island, Seychelles BTCX, Binance Cayman Island, and Coinbase. Coinbase is the only one which is the US.
Yep. And it's actually, I'll tell you part of the problem, if I can quickly show you something, is this. Again, I've said FTX a couple of times, but forget FTX. The problem, so this is just very quickly, this is an exchange graveyard. So if you think of where FTX is on here, it's down here. It's here. So since FTX, all of these have blown up. And then pre-FTX, look at the number. MIA, business reasons, missing in action, disappeared. MIA, rebranding, disappeared. Regulatory, scam, business reasons. So, it's huge. It's a huge list. So I find it funny when people talk about FTX, everyone thinks it's like just FTX, but it's a much, much, much bigger. FTX was huge, but not having an appropriate standard in place to deal with this as a VASP ecosystem creates multiple ongoing issues, and authorities and policymakers and regulatory authorities and everyone, they see all this stuff, and they continue to see it, they react like, oh my goodness, and this is what leads to all of these problems. So yeah, I'm a definite big proponent of pushing the right message, but pushing it in the right way, and having those kinds of interactions and discussions, and moving it beyond a pure world of AML. That's a critical part of it, but it can't be the only part of it.
I think the customer protection, UK surprisingly it's moving in the right direction, where they look customer assets and customer protection one of the key deliveries to make it meaningful for everyone. But at the same time, if this is going to be, you remember, our discussions when we said, okay, when we look at volumes, the volumes are with unregulated exchanges as opposed to regulated exchange. I think it's changing, and FTX and similar are, but at the moment, I would say, Coinbase should be by far the biggest exchange, right? If you think of this, because that should be, people should be thinking in this way. Okay, I'm going to the most secure exchange, Kraken, Coinbase, because you have the relevant protection.
Yeah, but it's also created other questions, which are, like, again, FTX was a regulated exchange. It was regulated in the Bahamas, and one of the fallouts of the FTX has been, proponents of the, more DeFi movements have said, well, look, you can't trust the counterpart. Trust the technology. So move from the middleman to the middleware. Let's, how can you trust a regulated counterpart? Look at all the stuff that happens. And that's been another movement. Should we, should people have more trust and faith in a network or piece of software than they can in a counterpart that has that level of control? And where is it going to end up? I'm not quite sure. And then you have, I think it'll be halfway between the two, to be honest. But then you have other, lots and lots of work goes into the EU, the MiCA related initiative. That's massive amounts of work, as it always is at a European level, to get many jurisdictions to agree on a framework of that nature. But then you have other fallout. So some of the negatives are MiCA. Is it proportionate? Is it bringing the scope of all of this activity within the scope of financial services regulation? Is it a stifler of innovation? Arguably, potentially. Is there a bit of a tech infringement? If I sell you a baseball bat today on eBay, it's not a financial services business. Now I digitize the baseball bat, and I create a secondary market for digital baseball bats. Now I'm not just regulated, I'm in full blown MiFID universe, quasi universe.
Yeah.
Is it so, is that arguably something of a tech infringement? Is it too weighted towards incumbent industries? They almost have a head start on everything. I mean, it's not a perfect outcome. And then again, Miss Lagarde came out saying, DeFi lending related stuff, that's going to be MiCA version 2. So that could be another 5 years
4
or
years,
4 years,
exactly.
whatever it is. So can't move quick enough. So, or you'll have countries forming different interpretations around MiCA of what is caught and what isn't caught. So it's the tech infringement is an important one as well. And then you have even more confusion because, what is it that's, I said before, all VASPs are not equal. The way that those platforms are regulated is all very, very different around the world. And then the asset is also different. So, again, the FATF define a virtual asset, and everyone talks about crypto assets in a certain way. But unfortunately, we all talk about crypto assets as one thing. So we don't treat a unit of BTC differently to a form of token, different to a stable coin, different to an NFT, different to. There are many different assets. So should they all be regulated in exactly the same way? Or a platform that deals with one and not the other, should they all be regulated in exactly the same way? I don't think that they can. And then again, to give you a concrete example of that, platforms that take, or countries that take views of NFTs, not constituting virtual assets. I mean, I get that, absolutely. But at the same time, look at the levels of market abuse that exist on NFT markets. NFT, I mean, I could create 8,000 accounts. I can enter into 50,000 fake transactions between myself for the same digital baseball bat I talked about before. I can set whatever price I want. I can move a price one way, I can move it another way, and eventually, after 50,000 transactions at 100,000, 101, 98, 99, 97, 105, someone comes in and says, "Ooh, I might buy that for 80 or 70." And look, that's market abuse, right? It's market manipulation. It's everything.
I don't know if this is market manipulation or market abuse. It's actually, it's almost like, well, is it fraud? At some point. I mean, let's break this down because I think that's interesting. So effectively, you can create NFT, right, which you can then buy. So you have still NFT and you can buy it. So you have assets which you pay for this, but at the same time, you have already NFT which is valued on the market. So then you can do these transactions in a number of ways and multiple, and
Be
then
subject to a cost of the gas. That's it.
Exactly. Yeah.
And that happens. That does happen.
But it's so difficult to regulate. I mean, it's almost impossible. It's almost impossible to, creativity which you're gonna have around this, right? It's not even possible to compare this to traditional market, right?
I know. But look, it has to. By whatever the outcome is, for me, always going to be creating more of a secure environment. And when people talk about global adoption and et cetera, I don't want my grandmother entering into a market where she has absolutely no one has any idea of what's going on. And and again, we have DEX related platforms where they talk about fair pricing because it's an open peer-to-peer market and the price is determined by the market. And I understand that in principle, but then look at it technically, and you have these MEV or extractable values, which is basically can be seen as a form of front running. So or you have sandwich related transactions or front running where you can vary the order of the transactions by paying more of a gas fee to almost sort of front end your transaction before the other transaction that is happening. So DEX platforms can also be subject to those kinds of abuses. So everything that's operating in these unregulated environments have really, really good positives on the one side, but they have a lot of risk on the other side. And for me, when I talk about regulation, I look at all of this stuff. It's quite funny because in 2014 and 2015, when I was speaking to all these big platforms and I was talking to them about regulator standards and secure environments and trust, all of that stuff, everyone said I was crazy. Oh, Joey, like governments aren't going to exist by next year and like frontiers aren't going to be there and it's all the end of the world. It's okay. Let's see. And that keeps happening. Now you have all of these wonderful, new, exciting concepts, which I super support, but they have to be done in the right way. And if they don't, we're going to be in exactly the same situation. Before we were talking about exchanges, now they're all racing to be regulated all over the place. Now we're talking about whatever, DeFi and all these new interesting concepts. Again, if they don't operate to the right standards, it's going to be the same thing's going to happen all over again. So I don't know, that's what I think. And I could be wrong. Maybe I am wrong, but it's definitely, it's a very interesting time, but I hope that the proponents of the right stuff will come out as the ultimate winners. Sometimes it's a question of time. So if you were say to a decentralized network, become mega fully regulated and fully compliant, and they look at the market and they'll say, but look, every single one of my competitors isn't doing that. If I do that, I'm effectively dead in the water. So
exactly.
So that's the difficult balance.
Joey, final question. So you had impressive career as a lawyer, right? Operating internationally, involved in every work, probably around crypto, in every corner of the world. And right now you change and you move, and you changed and you moved to effectively, being part of the business, right? So you are director in Xapo, head of public affairs, policy and regulation. Why was this change, and what's the most important, let's say, in your work, or most difficult?
I mean, that's a really good question. I think when you act as a lawyer, an advisor, and lots of people act in different roles, I always use the analogy of sort of helping to build a ship. So what some of the lawyers, and there's some brilliant lawyers out there, and they've done really fantastic stuff. They're, let's just call it shipbuilders in that analogy, and they're allowing it to be constructed in the right way and to operate properly and be able to sail correctly and turn, and all of these great things are being done. And then they go off to sail, and lawyers are not on the boat. So the change here is then at one stage you say, well, I actually want to get on the boat now, and that's the big change. You're on the ship, and there's lots of positives to that, and it's very exciting. A lot more risks. If there's a hole, you can sink. So the lawyers are not on the boat. So it's the lawyers are they'll come out on an emergency ship and help fix a hole. But so it's very different.
But Xapo is unique, right? I mean, in so many ways it's unique. I mean, it says proper banking license.
Yeah, exactly. I mean, we are the in a risky environment of, let's call it, unregulated and not quite regulated or difficult regulated VASP exchanges, decentralized protocols, whatever it might be. Xapo is the crossover between those two. So we are the secure pillar, the cornerstone, the credit institution or bank, holding your US dollars, earning 4.1% interest, deposit guarantee scheme, insured, very well capitalized, supremely well, governed, but with an exit and entry point in USDC, for example. So we're the crossover between the two worlds. You can access that exchange platform, and on that exchange platform, you are conducting, trading related activity. But I don't want to hold my savings there. Yeah. I'm interacting with a bank that can offer that crossover, and so it's quite innovative and it's very new. I mean, I don't think we're anywhere near most private banks or banks offering you blockchain based payment rails into your bank account. That isn't really going to happen, and exposure to the single asset BTC, and Xapo's been BTC native like right from the beginning. And again, it can be part of your wealth preservation and everything else. Your exposure to a digital unit of value in, again, an ultra secure environment, properly regulated, properly segregated, also interest bearing, but no risk. So it's very, very different to what's out there in the world. Very different.
And what's the biggest challenge on your side?
I mean, lots. I mean, for users to understand the value in that, so it is a messaging, a part of a message.
So that's the business, let's say, side. What about regulatory and compliance side? I mean, that's a massive operations in terms of compliance, right? I mean, every bank my time in RBS, there was 15%, 20% of total staff was around AML compliance, around 30% was in compliance in general, right? So that's massive operation, right?
It's a massive operation. I mean, Xapo is a regulated bank and a regulated VASP. Both we operate from a compliance perspective to the bank standard. We don't have separate lower or different standards for the VASP. But yes, it's challenging when you're worth servicing what we would call a mid-affluent market around from all over the world, which has outside of the US and obviously the markets that we wouldn't service at all. But that of course, yes, it has things that we need to consider. But if you try to get, you mentioned an RBS, not RBS specifically, any big legacy large bank to adapt to new processes for assessing the risk related to a client, a customer, a transaction, the history. We're right on the front edge of all of that stuff as well. So again, it's adapting new standards and trying to develop new efficient onboarding systems through all of the standard, whether it's GPS, face recognition, et cetera. There are lots of things that we're trying to build into that to make it as seamless as possible. But again, developing like everything else. I'm sure we'll learn lots of things along the way as well.
All right, Joey, thank you very much for your time. It was a pleasure. I think, we should do another one because we can, talk another hour at least. Yeah. Thank you.
Crypto Compliance brought to you by Gatenox.